So basically, so financing solutions for DRE focused MSMEs. So this is a graph which actually tells the story, in terms of the distribution within the rooftop solar installations between the capex mode and the opex mode. So the capex means that MSME is having to finance and own the asset itself, and opex meaning that there is a RESCO developer who owns and maintains, who finances, owns and maintains the asset. Now we see that there has been a continuous plummeting of the share of OPEX, which means that the RESCO developers are not really coming to the MSMEs. That solution is becoming bleaker and bleaker. And why it is so? And so we see now, our next slides, I would try to dwell upon the constraints which are there in both these models and what are the possible solutions there. So as has been discussed since the morning, MSMEs are penalized for being small, and there's a huge risk perception, high credit risk perception that MSMEs carry, plus the fact is that they don't have enough collateralizable assets. They have limited credit history and financial information because they are not typically financially literate. So, so that is a situation. I mean, that is the kind of a bane which is getting carried on, and this, of course, translates into high. The risk perception gets translated into high interest rates. So, what is the kind of solution that we have? So, obviously, this is something which has been tried. CGTMSE is a great example. It has been enhanced, but just to give a kind of a so diagrammatically, if we really see how the cost of debt it moves, it increases with the increase in the probability of default, and it also increases with the increase with the decrease in the chance of recovery of the loan after the default. So it is all based on the perceptions and actual default characteristics which are there. Now, in the case of MSME, there is not much of a history in terms of actual defaults, but there's a huge perception. Now, what guarantee schemes do is whether it can act on a pre-default basis or on a post-default basis, and both can, kind of serve to reduce the cost of debt, which these these MSMEs can get from the banks. And so guarantee structures are very important, and we have got certain schemes. World Bank has come out with a 100 million USD scheme focused on solarizing MSMEs with SBI. But in terms of the institutional support, that maybe what we can do is that a similar kind of a scheme as CGTMSE can be dedicated to the green MSMEs can be instituted. And that is something which can be a good solution. The other thing, as I mentioned, that the other aspect is, as in the first point itself, I was mentioning that the credit ratings, or I think somebody also mentioned that in most cases the credit ratings are not available for this sector, or they are very low. So practically speaking, credit ratings have not been the solution to shepherd capital into this sector, or in terms of being able to differentiate or discover the risk pricing for MSMEs. So we have to think afresh. Obviously, interest subvention is something that is a great idea, but what we kind of propose, I mean, in CPI we are working on this, is a new concept called carbon ratings, which is depending upon just the emission characteristics of the MSME. It can be expanded to the greenness of an MSME, where you include not only the carbon emissions, but there could be other aspects also. And these are objectively, measured. How much of tons of CO2 are getting mitigated. So that is a way in which a classification within the MSMEs, and hence the kind of a, I would say, carrot and stick model for greening can work. Because why it is important today is that green MSMEs are faced with rather I would say MSMEs are faced with a carbon border tax like other exporters, and 45% of India's exports come from MSMEs. So it is very important that green MSMEs, rather MSMEs, prepare themselves for the eventuality of facing the international market. And it is something which can be seen. And so the other aspect, that other solution that I can say is that there's a disconnect in terms of the tenure of the loan, because any lender to an MSME is not really willing to lend beyond, say, 3 years or 5 years of horizon. In any which way, banks are not really can put in long-term money. They are not. There's an ALM mismatch, and so I think if we look at, on the other hand, if we look at the kind of bankability characteristics that come, we see that the debt service coverage ratios and all that, they get better only after 7 to 8 years. And for any kind of solar, sorry, I'm not able to. Anyway, so I have certain graphs behind, but I'm not able to link it. So those are the kind of, so why can't we have a dedicated takeout financing scheme where, for first 2 or 3 years the banks take up the loan, and then it is taken out by certain institutions, which may be SIDBI itself, or any kind of entity which is earmarked as a green bank. So that is a thing where you have what makes it that it becomes more affordable. The MSME can pay out, has a longer tenure, and its debt service adequacy also moves up. And there is so basically the other things that we need to solve for is the lack of awareness amongst MSMEs and the integration with the ecosystem. MSMEs are often unaware, or they are skeptical of the the technical and commercial viability of getting into a solarizing capex, because they have competing demands on the capital. They have other project capex, and they have working capital demands. So there have to be institutionalized mechanisms by which this information, that this is going to add value to you, is something which is very important. And then, we need to have, more and more. I think the cluster development program of the ministry is very good. It is something which needs to be complemented on the private sector side with more of TAs and PPFs, which are doing these diagnostic studies, capacity building, market development. And also, we need to create some kind of a multi-stakeholder platform. I think in the earlier session somebody mentioned, we have to get them to face-to-face with the installers, financiers, with the ecosystem enablers. Now, this is something which in today's times, with the IT thing, if the IT development, this is something which can be done very easily. The second part, as I was mentioning, is the OPEX model. And the OPEX model, again, now there are 2 layers of credit aspects there, because here we are solving for not only the MSMEs which are which are perceived to be risky, but also there are certain rescos or the developers who are not as well positioned as say Tata Power and all. So we have in our different programs, we had come up with a credit guarantee mechanism, and again it's not working. And so there can be a situation where a certain amount of certain structuring which can be done, which solves for not only the payment defaults but also payment delays from MSMEs, which do not affect the smaller rescos, so that the smaller rescos are also able to come into the market. And then we again, because this inadequate size of small MSME projects, we need to bundle. We need to have aggregation solutions which kind of defray the costs of the transaction costs and the documentation and due diligence costs. And it can be, of course, there are structures which we have worked on. For paucity of time, I'm not getting into that. So those are the kind of solutions which are available. We need to work on them. And also we need to work on the, there are certain areas where solarization only may not be the answer. But there are other benefits which can be combined. For example, solarization plus energy efficiency. UNIDO, Jeff and B have worked for about 12 years across 12 sectors to map out certain technologies in which these benefits are, kind of, and the extent of the benefits have been mapped out clearly. Now, if we look at how this solar PV and these can be combined, sorry. So, so if we combine this, I mean, just a small example. I mean, if you see the lower graph, without any intervention, the debt service coverage issue is just about 1 times. But if you make it on, if you create only renewable energy, that is, or if you bring only the solar project, it is only, it moves to 1.07, and if you take it further, it moves to slightly higher. So that is the kind of, if you have a combined benefits approach, you can look at that. I'll kind of wrap it up with a, so there are other kinds of MSMEs which also have to be looked at, and Tushar has very clearly mentioned about the productive use of renewable energy. These are also MSMEs where it is not the question of debt. They are even before the debt stage. They are early stage ventures who are, looking, who come up bootstrapped with their own capital, and they need to be handheld through the, what is known as the death valley stage, where it can go wrong with unless and until there is sufficient hand-holding from the ecosystem. So there we need to have specialized product preparation assistance in terms of, say, market linkages, in terms of legal help, in terms of product certification, in terms of go-to market, and so on, so that the time in which they can come out of the death valley is something is kind of expedited.
So, Mr.